Hello to all traders. I hope you were able to get into some good positions yesterday following the release of the US retail sales and an upward revision of the numbers for the previous month. With the 10-year US yield rising decisively beyond 3%, market participants are now looking to ride the US roller coaster. Up to this moment this week, Monday was characterized by low volumes and low volatility as no economic indicators were due and as investors patiently waited for a fall on Tuesday. Yesterday, Euro lost nearly 90 pips as a quarterly German preliminary GDP disappointed. Euro-dollar remained under pressure as an array of poor data from Europe followed and the vulnerable currency gave in to further losses as dollar rose on an upward revised retail sales. The exchange rate has now formed a double bottom around 1.1820 while investors shift their focus to today's consumer price index. The British pound somehow shrugged off dollar's dominance yesterday as hopes for an interest rate hike supported the currency. Hopes increased following the release of a strong jobs report that showed unemployment rate was pushed 0.4 higher over the period of the last quarter. Although it seems like the pair is under pressure, price is stable above 1.3512 and the formation appearing on the daily chart tell us that another range balancing may well be expected since this has now happened over the past 9 trading days. As for today's releases, markets expect the US building permits to provide further clues towards a dollar-yen rally, which stands at a critical junction. Dollar-yen surged to the second extension of 110.44 on Tuesday and has subsided since, probably for a correction and some profit taking. Price remains above 110 and that is likely to be the case ahead of the building permits. A break of the new top could be the catalyst for the bullish extension. On other events, commodity traders are expecting the release of the EIA report on crude stocks, and this is after a build in stocks reported only yesterday by API. Although divergence on the API and EIA reports is getting wider, API comes out first, so it tends to get traders position themselves ahead of EIA, with oil having formed a double top and retracing back to opening levels yesterday. Indecision is in play. The $71 per barrel price seems to be the bottom of the market for now. A good EIA may be pushing price to fresh multi-year highs. I would like to recommend that you keep a close eye on those two releases today. See you again next week.